Just a normal day in the stock market, Tesla's stock went up 13% because of a stock split. Oh my goodness. That and Apple's stock split took effect yesterday as well. I'll give you an update coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Welcome to this channel. If you're not a subscriber, hit that subscribe button, turn on notifications, and smash that thumbs up. All right, so we've been talking about it for a month. Both Apple and Tesla both announced a stock split that was supposed to take effect at the end of August, first day of the week. That was yesterday. And what happened to the stock? Well, the stock market actually had a rough day yesterday, sort of choppy, and the Dow actually fell quite a bit. But that didn't stop Tesla and Apple. Tesla's stock was up nearly 13%. Let me just set the stage here. Tesla, it took the company 7 years to be worth $51 billion. I mean, and that is a massive amount, right? $51 billion. Took them 7 years to have the company worth $51 billion. The company gained $51 billion of value on Monday alone. That is insane. Tesla stock up nearly 13% purely from a stock split. Apple stock up 3.5% as well, which is, no small feat. Most stocks yesterday were negative, but Apple actually lifted the NASDAQ, lifted the S&P, and really just because of the split. I mean, Apple didn't announce anything. I'm waiting for them to announce a new iPhone. I need one. My daughter's wanting to upgrade her little iPod as well, take my old phone. So I'm waiting for Apple to announce something, but the company just, went up, what was it, $40 billion yesterday by Apple, just because they announced they actually executed their stock split. A couple other things on Apple that just don't quite make sense. From the bottom, in late March of this year, the company is up nearly 130%. Since the bottom. And you might say, well, that's justified, it probably dropped a lot. And that actually, Apple held up pretty decent during the pandemic. You go back a year ago from right now, and the company's stock is up, almost 140%. So that is a significant amount. Remember just a couple weeks ago when we were all racing and cheering for Apple? Could it be worth $2 trillion? Could it be worth $2 trillion? It's now worth over $2.2 trillion. That's incredible. And then lastly, before I tell you what this all means, let's go back to Tesla. So yesterday, with the stock surging 13%, without any news, just the fact that the split actually happened, the company's stock is now up nearly 50% since they announced the stock split a month ago. The company is up nearly 50%. The company is up almost $225 billion in a month. In a month, not because they came out with any new technology or made any, big announcements. The company is, selling more cars or whatever. No, they just said they're going to split their stock. And then their stock split actually happened. It surpassed Visa as the 7th largest U.S. company, Tesla did. But Visa, obviously a company very well, last year had profits of $12 billion in 2019. That's a lot. Tesla lost $1 billion last year, the same year. Tesla now, just in the second quarter, became profitable just barely, making them technically eligible to be in the S&P 500 now. Just barely they became profitable purely because of some grants that they received from the government that they needed to count as revenue. Counting that as revenue offset some of their expenses, makes them marginally profitable. The company, Tesla, is now trading at 1,200 times earnings. So let me say it differently. If Tesla's earnings, which again propped up last quarter by government support, government credits, if you will, if they keep that profit, it would only take you 1,200 years for you to make your money back at investing at these levels. All right, 2 points. Number one, a stock split does not add value to its company. It doesn't. It doesn't. It is purely just exchanging $1 bill for 4 quarters. Instead of having one bill, you now have 4 quarters, but they're worth the same. They're worth the same. Yet in this crazy risk doesn't matter, profits don't matter, everything's going to go just fine stock market that we're in. These stock splits have created a surge of value for Tesla for sure, and Apple as well. Although Apple is obviously, they've had staying power. They are an unbelievable company, and Tesla has barely even gotten off the ground, no pun intended, to SpaceX. And so number one, stock splits don't add value to the actual company. It does attract potentially more traders, as Apple stock went from 500 and change now to just over 100. Tesla stock went from well over $2,000 now to 500. I mean, Tesla might need to split their stock again to make it more attractive. So it makes it more attractive for retail investors, retail traders, but it doesn't actually add money or add value to the company. If it attracts more retail traders, you would think institutional traders would say, oh, you're bidding the price up that high? I'm selling at these high levels. So it shouldn't actually add value to the company. It often creates more trading frenzy, but it shouldn't actually add value. The second takeaway, I'm just going on record here. I don't know. Obviously, I don't know the future. And if you've owned Tesla stock, if you've owned Apple stock, if you've owned Shopify, if you've owned any of these companies, you've done extremely well this year. And we have our momentum strategy. We're using a lot. I mean, it's all growth and all tech. So our clients have done significantly well in those momentum strategies that are invested in these. So again, disclaimer, disclosure, all that sort of stuff. This isn't investment advice. But guys, I am extremely worried about Tesla in particular. I mean, this is just not normal. And so I am extremely, extremely cautious. And again, this is not investment advice, but I would urge you to heed caution here. And if you're thinking, geez, the company announced their split, the stock is now valued at only $500 instead of $2,000, maybe I should jump in, and they went up 13% yesterday. Just be careful. At some point, I think the music's going to stop. That or Tesla very soon will be the #1 car manufacturer on the planet. If that happens very soon, maybe you can justify this price. But even if that happens, but it takes them 2 decades, you still can't justify this price today. So just be careful. Be very, very careful. If you're playing in that stock, you are playing with fire. And I would just be extremely, extremely cautious. So stock splits actually don't add value to the company, but they do create a little buzz. They do create a trading buzz. And second, this rampant risk, despite what's going on in the overall economy, makes me nervous. So be careful. If you're speculating in these individual stocks, know that you are speculating. All right? Reach out to your certified financial planner to make sure that you're taking the right level of risk for your overall financial situation. I told you our dynamic strategy, it's been in all growth. It's been in all tech. And so it's been investing in these companies. Our clients have been appreciating. And just make sure, though, you're taking the right level of risk for your overall financial situation. Do you need to be gambling on Tesla stock where you could lose all of it or almost all of it? Or does your financial goal not require you to gamble and risk it all, and instead you just need competitive return or just slightly above average returns? Work with your CFP to make sure you're taking the right investment approach for your overall situation. If you don't have a CFP, you can always talk to one on our team here at Korhorn Financial Group. Find us online, korhorn.com, that's Korhorn with a K, or online at wisemoneyshow.com. You can always send us an email as well, info@korhorn.com. All right, there you have it. Be careful out there, investors. All right, you're now ready. Go out and take your next wise step in your financial life.